All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today what we're going to be talking about is a couple different Yieldmax ETFs which has seen some pretty big bumps in the past little while, and one Yieldmax ETF that is currently seeing a big downfall. And we're going to talk a little bit about the news about each of these, why both Tesla, the underlying stock of TSLY, had a huge run up the other day, going up about 12 to 13%, and now currently up about 2% on today's date. And then we're also going to talk about Meta and why it took a $125 billion hit in terms of its stock and kind of total market cap for their company. So we're going to talk about that today. This is all about high dividend yielding investment, looking for any kind of opportunities within these stocks and potential rebounds or potential downfalls. So that's what we're talking about today in this video. We're up to 4,475 subscribers, 246 subscribers in the past 28 days. Absolutely doing fantastic there. And maybe you guys are holders of TSLY or you're holders of FBY. Either way, if you're a holder of Tesla or Meta, I feel like this is going to be a valuable video for you. I'm kind of going to expose here exactly what happened with each stock. I'll kind of give you my insights. I do think that Tesla's at a pretty interesting point, and I do want to start here. So the Yieldmax Option Income Strategy ETF for Tesla, it went up about like 15% or so. You could see here that it traded at a low of $12.90 and is now back up to $15, which is fantastic. I currently hold TSLY, hold 70 shares only after their stock split. But Tesla is at a key marker here. And when we go to the year-to-date calendar, the year calendar, you see that Tesla has been trending down for the majority of time. And this level, $165, $166, is a very key level because look how big this resistance is right here. We go to, let's see, the 1 month or the 6 month, and you could see here that there's a lot of resistance. The stock kind of hovers in this area and it's hard for the stock to break out, so we either need a fast breakout to the upside or we might be trending back down again. But this is a great sign for Tesla, and basically what the news was, Tesla surged after Elon Musk says new affordable EV models are coming. So basically Tesla surged 12%. This was yesterday when Tesla surged after Elon Musk announced that the electric vehicle company Tesla plans to begin new productions of new affordable EV models in early 2025. There was a big concern because they're saying that Tesla's revenues were falling about 9% year over year, and people were concerned about Tesla. They weren't being as profitable as they once were. Or that's not the sense, because they are growing more in profitability, but they weren't growing as fast as they were previously. But when going to Tesla's financials, I see absolutely no reason to concern. And I do think if you're a long-term Tesla holder, then maybe this level of $166 or below is a great level to be buying Tesla. Look at this. Their revenues have been increasing. They've tripled since 2020. Their net income has gone up 15 times since 2020 and continues to grow. Pardon me there. We go to their balance sheet, and I'm just kind of reassuring you guys, look, I'm no financial expert, but what I see here is I see a growing company. I see a company that's grown its balance sheet from 52 billion to 106 billion in a span of 4 years. I also see current liabilities, they're growing, but they're not growing as fast as the current assets, which is great. One thing to keep a note was Tesla has been missing their earnings, but they're still a growing company. They have very high expectations, in my opinion. And you know what? They've become pretty much a revolutionary car company, and I think they're doing a fantastic job. If I was holding Tesla, I would not be selling shares. I'd only be looking to add more. See the cash provided by operations doing fantastic as well, and the free cash flow also doing fine. So I think Tesla as a whole is doing fine. I think that this current kind of downturn is just due to the fact that Tesla is a heavily traded stock, and in the past year it's been on a bearish trend and people have been taking advantage of that. But I do think over the long term Tesla's going to do as it has and definitely appreciate, which is why I still continue to hold TSLY, and I do believe that TSLY will recover with Tesla, of course, because whatever the underlying stock does is what TSLY is going to do. And so I'm holding my 70 shares of TSLY, and I am not necessarily concerned about that. Now, jumping to a stock that may have you a little bit of concern. Pardon me, guys, my voice is going crazy today. FBY. FBY is the Facebook or META option income strategy ETF, currently about $19 in their share price. And they just took a 12% hit today, with the underlying stock META taking a 12% hit as well. And the reason I find kind of funny and the reason I find it kind of funny is because Meta shares take a $125 billion hit as Facebook owner raises spending forecast. Let's just look at this a little closely, okay? So basically what's happening is Facebook raised its total expense forecast to $96 billion to roughly about $99 billion, which is a raise of $2 billion. So Facebook, the company, announced that they're going to have a $2 billion raise. And what did this do to the share price? It knocked it $125 billion, which I think is crazy. Now, what I want to show you here is investors sent the stock 10% lower in after hours trading when Meta's first quarter results showed further bills were expected to fund new artificial intelligence, which Facebook, the app, is all artificial intelligence products and the infrastructure behind them. So basically, because they're going to be bumping up their spending $2 billion, the stock took a 10% decline, which knocked off about $100 billion or more from Meta's current market cap, which I think is crazy for a $2 billion extra spending when they're already spending about $96 billion and AI is pretty much their entire platform. Facebook is an online company which uses a bunch of AI tools in order to see what users want and what users are looking for their current online needs. Quote unquote needs is a very loose word, because do we all really need Facebook? Do we all really need it? No, it's more like an entertainment platform. But if I was a long-term holder of Meta, I would not view this as a concern. I think, this is just kind of another step in their business that they need to take. And I think this $125 billion hit to their current share price is just really unjustified for what it was for. And so if you're a long-term holder, I view this as a potential buying opportunity. Once again, I'm not giving financial advice, but I just say this is a potentially good opportunity. And you know what? If you hold the FBY Yieldmax stock, I'd also be looking at this as a buying opportunity, because Facebook and Meta is a great stock for a Yieldmax option income strategy ETF. Tesla has had some pretty massive swings to the downside, which doesn't play well for TSLY, and that's why the share price is so low even after the stock split. But Meta has been a slow grower over time, which it's exactly what you want for a Yieldmax option income strategy ETF. You can see here, started out $20, dropped down to about $18.50 at its low, came all the way up to $24 while still paying about a 60% dividend if I could find Facebook, the Facebook Yieldmax option income strategy ETF. Yeah, right here. You can see a 65 dividend at the same time that it's been slowly appreciating over time. I understand that the stock did take this big hit, which obviously plays into the fact where FBY went from $21 to $18, but I think over time Meta is going to continue to trend upwards. So if you're invested in FBY, I would see this only as a buying opportunity, but that is only my opinion. So I hope you guys did enjoy this video. If you did, we're up to 4,475 subscribers. Just wanted to give you guys a little sense on what I think was happening with Tesla, how we are approaching a pretty critical kind of buying point or selling point in Tesla, where shares are either going to go up or they are going to fall further. And if this is potentially the turnaround for Tesla, this was the news that they needed, that they're going to be coming out with new affordable EV models by 2025. Hopefully that will in turn boost the share price back to what it once was. We've been in a downtrend for the past year, and it didn't look like anything was changing anytime soon until we got this news. So who knows? This might be the turning point for both Tesla and TSLY. Meta, same thing, just a little blip in their stock price, sending it 14% down currently, but I would view this as a potential buying opportunity if you're in the Yieldmax version, but only my opinion. So I hope you guys enjoyed this video. I hope you guys do stick around. I hope this provided you with some value. If it did, give this video a like, and I hope to see you guys in the next video.